And a lot of these bears, they saw the market down, in terms of the NASDAQ, let's speak about, right? They saw the NASDAQ down 30, 35. At the peak, it was down like 37% plus, right? And they saw that, and it still wasn't good enough for them, right? They really wanted to see that NASDAQ go down 50% plus and the S&P 500 go down 50% plus. But in order to get the NASDAQ to go down 50% plus and the S&P 500 especially to go down 50% plus, you need pure panic, and I mean the purest panic, right? And I'm talking about through everything. I'm not just talking about retail. In order to get a 50% drop, you need panic in Wall Street. You need the financial system to nearly collapse. You need earnings of companies for the strongest companies in the world to go like pretty much negative. I'm talking about they start losing money for the strongest companies in the world. And we just haven't seen any of that, right? We've got the ultra levels of panic from retail, but it's not like there's no systemic risk like you had in the great financial crisis where it's like, oh my gosh, we could take down all of Wall Street. We could take down the biggest banks, right? Oh my gosh, they need bailouts. Like that's the type of shock and awe you're talking about back then, right? And in terms of retail, they panicked. They sold. That's why Robinhood users are down 10 million from the peak. 10 million monthly active users Robinhood's down. So you got retail to capitulate. You got a lot of fund managers to capitulate in 2022 and dump out of the market in mass, especially over the summer and into the fall time. Those people dip, man, and they went cash, they went wherever, right? And as long as you got to always position yourself for what's the likely probability over this next 5 years, right? And the likely probability over the next 5 years is the market does well. And these companies that are some of the best companies in the world are going to do very well. And companies like Meta, companies like Tesla, companies like Shopify, like countless of these companies are going to see their net incomes explode, right? And you're already seeing some glimpses of some companies doing some shocking things. Check out Palantir, right? Palantir was not supposed to be profitable on a GAAP basis for years from now. Now they're talking about in 2023, they're going to be GAAP profitable. It can change quickly with these companies. In a matter of 2 to 4 quarters, many of these companies can go from ultra spending like crazy to suddenly switching their business models, cutting down on costs and expenses in a major way, right? While their revenue is also playing catch up there, increase margins, and next thing you know, all of a sudden you're like, how did this company go from crazy losses to profitable, right? These companies switch up quick, and they say, you know what, we're gonna sacrifice maybe some growth for profitability. And these are things that unfortunately a lot of market participants, and especially a lot of the perma bears, they don't take this stuff into account. And it's like, dude, you got to take this stuff into account because this is what changes the markets overall.